for their company. We're joined now on this leg of the show by Puneet Dalmia, the Managing Director at Dalmia Cements. Mr. Dalmia, very good morning to you. Thanks so much for joining in. Can you start off by telling us what kind of sales and profitability each of the 4 divisions that you're demerging as separate entities have? Cement, sugar, the power business, and of course your refractory side.
I think this demerger basically creates pure play companies, and it increases transparency for investors in each of our businesses. It also will provide each business an opportunity to grow independently, and in our view it will accelerate our growth over the next 5 to 10 years. The profitability of each business varies depending upon the cycle. And in the sugar business, we have seen EBITDA margins going from 15 to 25%. In the cement business, we have seen EBITDA margins going from 20 to 35%. In the power business, mostly it's a captive business right now. The merchant power sale is only 10% of our total sales. So I think really it has a cost plus kind of model at the moment. But over a time period, we expect the merchant share to increase as we build this business going forward.
Mr. Dalmia, morning to you, sir. Let's just talk a little bit about Dalmia Bharat, because that's the business where you've hived off cement as well as power.
Yeah.
You're looking at an infusion of funds. Could you give me a rupees crore figure of the quantum of infusion that could possibly take place and a tentative timeline for it?
We are in talks with private equity firms, and we are looking to raise between 500 to 700 crores in the next 8 weeks. This money will be used to fund our expansion plans in Dalmia Cement Ventures Limited, which is a 10 million ton expansion, where we are going to put 4,500 crores to work. And we already have 3,500 crores out of 4,500 lined up. So we're going to raise 500 to 700 crores to partially fund that expansion, and the rest will be funded through our internal accruals.
Mr. Dalmia, pardon me for sounding a bit naive, but just a little confused here. So you're hiving off power and cement into Dalmia Bharat, and Dalmia Cement will hold what then?
Dalmia Cement will be a sugar company, and it will be an integrated sugar play with the cogeneration business and the distillery business along with the sugar business. So this business will be renamed to reflect its, true business, and it will become a sugar company once the court and the other shareholders and the creditors approve the scheme.
Will you be listing Dalmia Bharat at any point?
Yes, I think Dalmia Bharat will be a cement and power company, and that will get listed in 6 to 8 months once the scheme is approved by the regulators and the courts.
Mr. Dalmia, do you think that a possible reason for spinning off various businesses, one is to unlock value, and I take your point on that. Are you looking at exiting any of these diverse businesses, sir?
No, I think we think India is a great growth opportunity, and each of these businesses have different cycles and a distinct set of investors. So we wanted them to pursue their independent growth trajectory. So our basic thesis for this restructuring is to allow growth for each business and also increase transparency. Currently, in Dalmia Cement Bharat, it's a conglomerate structure. So many investors have told us that they are not able to understand the business-wise financials so clearly because we reported consolidated numbers, and therefore this structure will increase transparency, which is a key part of our strategy going forward.
Sure. Mr. Dalmia, can you give us a sense of how much the promoters will be holding in Dalmia Bharat and Dalmia Cement post this entire restructuring is over?
It's a mirror demerger, so the shareholding structure will be exactly the same.
So
all Dalmia Cement, our holding will be close to 57%.
In both the entities?
In both the entities.
And how much are you looking to sell to private equity investors in Dalmia Bharat? What is the maximum level you would be willing to sell for the 500 to 700 crores?
So I think the dilution will be dependent on pricing, and I can't disclose that at the moment.
Okay. But is there a maximum level in your mind that you say, okay, as a promoter, I sit back and say that this is the maximum I'll be willing to dilute, 5%, 10%. Beyond that, I will not go.
I think we are looking at a dilution which is not more than 15%.
Not more than 15. So that means you have to hold on to at least 42%. That's the...
Actually, we are raising capital in the unlisted entity, which is Avnija. So the promoter holding will continue to remain 57%.
But it will get diluted further when you actually become a listed entity, when you offer shares on dilution. So on an expanded equity, post this equity offerings to private equity shareholders, as well as your listing in 6 to 8 months, there will be a dilution of the promoter shareholding, correct?
Yes, will get diluted, yes.
Exactly. So at that point in time, you would want to hold on to at least 40% of your shareholding.
Sure.
That would be a correct way of looking at it.
Yeah, absolutely.
How have you tied up this 3,500 crores? Is it largely equity or debt? On the to one of Shruti's earlier questions, you had said you'd already lined up 3.5 crores. If I heard you correctly, how have you lined this up?
Basically, we are funding the projects in a 70-30 debt equity ratio.
Okay.
And out of this 3,500, 3,250 is debt. So debt is 100% lined up.
Okay.
250 equity we have put in from Dalmia Cement through our internal accruals.
Okay.
Mr. Dalmia, can you tell me a little bit about the business fundamentals at Dalmia Bharat as they will be post the spin-off? Can you tell me, for example, about the order book strength, about the capacity of the company, as well as the balance sheet strength?
Sure. The sugar business is basically a 22,500 TCD and 80 megawatts of cogeneration and 80 kiloliters per day of distillery. So we have a North India footprint. All three plants are in Uttar Pradesh. The cement business basically has a South India footprint. We have 9 million tons of capacity, and we have a stake in OCL India, which is 45%, which has presence in the eastern region. We also have 10 million tons of expansion lined up, as I was talking. So the cement business totally will have about 19-20 million tons post-expansion. I think in terms of scale, each of these businesses has reasonable scale. In terms of fundamentals, I think the sugar business is facing a little bit volatile pricing right now, and I think prices should firm up in the next 12 months. In the cement business, it is actually the reverse. The short-term outlook is positive. Prices have gone up, in this quarter because the monsoons are over and demand is very healthy. But if I look at the next 2 years, I think a lot of new supply is coming in, and I'm a little cautious about cement prices.
So on balance, how much do you expect cement prices to come down by on an aggregate basis or in percentage terms, and how much do you expect sugar prices to rise by roughly in percentage terms?
I think we'll have to see that. I think sugar prices should go up by 5 to 10%, and I think cement prices, depending upon demand, if demand continues to be very robust and healthy, they might remain flat. Otherwise, I expect some 5-7% correction.
This 10 million ton capacity that you're planning in Dalmia Cement, or Dalmia Bharat, I should say right now, by when is it going to be up and running? Is it going to be FY11, 12? By when will it be completed?
No, we still haven't commenced construction, so it's going to take about 2 to 3 years.
Okay. My analyst has done some calculations. I'm hoping that you could help me out with this. He's come up with some sort of enterprise value for your various businesses. He says Dalmia Cements is about 2,900 crores, OCL about 500, and the sugar business at about 700 crores. Is that a correct way of looking at the enterprise value combined of about 4,500 crores?
I think it's best that the analysts comment on it. I think we are focused on building a strong company, and then it's for the market to decide how to value the company.
Is he in the ballpark though?
I have no idea. I think it's best for the analysts to comment. I think all promoters think their companies are undervalued, so I think my comment will be very biased on that.
Pleasure speaking with you, Mr. Dalmia. All the best with your plans going forward. Thank you so much for taking time out and joining us. Puneet Dalmia there. I don't think there's any question that was left unanswered. That was fairly comprehensive at various aspects. There's too much to recap from this interview, but let's try and attempt that. He says that the demerger is likely to increase transparency. He is looking to raise 500 to 700 crores in Dalmia Bharat, which is a company that's going to be housing the cement and the power business. He says there are no plans to exit any of the business, and Dalmia Bharat is to be listed in the next 6 to 8 months. He's gone on talking about lots of other things. Cement prices expected to remain flat with a slight negative bias of 5 to 7%. Sugar prices to be rising by 5 to 10%. He's already lined up 3,500 crores of the 4,500 crores of expansion that he's talking about, and largely done through a debt equity ratio of 70-30. Let's pull up the stock of Dalmia Cements. While he was talking, let's see what happened to it. If you can just pull up the intraday chart and just see what that stock was doing. It'll come up on your screens. While it is, Devin, just a thought on this entire restructuring exercise of Dalmia Cements. You would have been listening into the management. What did you make of it?